We've also heard a lot of talk about gold and silver falling below their 200-day moving averages. The last time we saw silver below its 200-day moving average was April of last year, 25. Silver was trading at $27. We saw what happened immediately thereafter. It went up almost fivefold. And then we saw it here again with gold crossing its 200-day moving average to the downside in the fall of 2023 with gold at $1,800, and we watched it move up threefold. So they're very adept. Now, Richard Russell used to talk about this 50% retracement in Dow theory, which is kind of what we've seen here. If you use 1,800 as your starting point for gold, which I think is a fair number, and then move up to 5,500, you're talking what? Just under...
Right now?
Yeah. So
5,500 would be 2,800.
Half of that is around $1,350. That's about what we saw lopped off of gold. And now it's starting to move. It's tested that 200-day and it's starting to move higher. You have in essence shook everyone out. You have shook the speculation out. You've shook the shorts out, and the leverage traders. And now it's starting to move back up with very little open interest and very little fanfare. And it's, I guess we'll have to see, because part of me wonders if this Iranian deal is actually real or it's just theater, because what you read coming out of the Iranian media is vastly different than what Trump is saying. So this could just be, a temporary placating of the markets. But I think it's stupid that the market rallies by $130 in gold simply because they think the Fed can now lower rates.
Stop for a second. Kevin just dropped numbers most analysts won't touch out loud. Gold at $5,500 by end of 2026, $7,000 through 2027. Liftoff above $10,000 in 2028. Silver landing between $125 and $135 by year end. Not hopium, anchored to M2, hitting all-time highs and a COMEX pricing system the smart money no longer trusts. That's the real story under the chart. Andy already showed you exactly why. Shorts shaken out at the 200-day, leverage flushed, open interest gutted right before the move higher. Wells Fargo is openly calling $8,000 gold inside 12 months. The big banks finally saying the quiet part out loud.
Silver demand is exploding. It has to be at the highest levels, because at the highest levels, we are seeing demand for silver increase dramatically. Look at China over the first quarter, bought more silver, imported more silver than in the history of the country. And you're seeing that on a very large scale. We're seeing huge deliveries on COMEX. At that level, silver demand is very, very high. At the retail level, people are still asleep. You guys aren't, but most of the people that you call friends and family are. So no, I haven't seen that. But look, when you have a domestic mine, this would be part of the Project Vault, which would be to develop a strategic stockpile and putting a price floor under the price of silver to bring forth companies like this that are domestic and that can
and
incentivize mining, no matter how uneconomical it is.
And remember, with the silver mines, and it might be an enormous find in Silver Valley, but remember that even still, 75 or thereabout % of all silver that we get is not from silver mines itself. It's the byproduct of mining for other metals.
Mostly copper, lead, and zinc.
Correct. Right. So, unless we are going out and we are increasing capacity to mine those metals exponentially, you're not going to see a substantial amount more silver.
That's why they would implement price floors to incentivize domestic mining that has been uneconomic.
Which is one of the questions that we have here from Douglas Raoult, X1P, who's hoping for an update on the price floor for silver. I don't have an update.
No, there hasn't been.
There hasn't been one yet.
My guess is it would be somewhere in the $70 range. I mean, it certainly, look, I think the fact that it held the $60 level, and then every time we get in the 60s, there's big buying, someone stepping in and buying. The fact that it shot right back up into the 70 range tells you that there are people buying at these levels that they think that there's good value here. My guess is that would be somewhere around where they would place the floors, but I don't know.
I think that would be around a $75, even though we're still below it today. I do think, and there's something inside of me that truly believes that we are going to end this year substantially higher than we are now. Like I really do, in my heart of hearts, in my gut, think that not saying, because I love the interview that you had with Michael Oliver. I thought it was great. And he's still steadfast.
Yeah,
I mean, he does. I mean, you're talking about, big kahunas, that he's still sticking to 300, 500. And I always say you can't get to 300 without 100 or 200 in front of it. But I do think that we will be seeing triple digits by the end of the year. And I think that when we do, I don't think that we're just going to be kind of on the surface of it. I think that we're going to way surpass it. I think that when we look back in January when it did it, it was much more momentum driven, much more FOMO driven. Everyone they were talking about it. They were talking about it on CNBC. They were talking about it on Bloomberg. They were talking about it on these financial networks. Then they started talking about how overbought and overvalued it was. And
speaking of making predictions that I never do, Michelle held my feet to the fire today and asked me, because a lot of the things that I've been talking about bringing back manufacturing, the Genius Act, the role that gold will play in all of this, are starting to come true, and which is kind of nuts to me. A lot of it is coming through, and when I saw this new guy, what's his first name, Paul Winfrey, appointed as an advisor to the Fed Chairman Warsh, it made my day. Paul Winfrey is a guy, and he's an economist. He's worked with Trump. He's a smart dude, and he was one of the economists who wrote a chapter in Project 25. You can Google Project 25, see what it's all about. But he wrote, I think, Chapter 24, where he advocates for issuing gold-backed treasuries. Now, I mean, I think it's very interesting that he would be the first advisor appointed. Let me read you actually what he says. He says, beyond full backing, alternate paths to gold backing might involve gold convertible treasury instruments or allowing a parallel gold standard to operate temporarily along the current fiat dollar. Now, I don't think they'll do that. I think they will do the treasury. Ease adoption while minimizing disruptions, but they could be temporary so that we can quickly enjoy the benefits of gold's ability to police government spending. In addition, Congress could simply allow individuals to use commodity-backed money without fully replacing the current system. Well, you're seeing states allow that right now, Texas and Florida, whatnot. But I think that, as Judy says, if you use gold backing on a treasury, it would act as kind of the guide, if you will, the sounding board. The alarm would go off if your monetary policy was too stupid, because gold would continue to march higher, higher, higher. So having it back the treasury would not be the same thing as a gold-backed system where monetary policy is restrained due to the amount of gold you have. This would allow you to do both. And she asked me, what do you think the odds of Trump announcing a 50-year treasury backed by gold, like Judy Shelton has told both her and I when we did podcasts? I did one with Judy, she did one with Judy. Both cases, Judy said, yeah, Trump told me he's going to issue gold-backed treasuries, more or less, on July 4th. I said it would make my day for sure.
Make your day. You might put on a red cape.
Yeah, I'm not going to sleep July 3rd. I said I might even drink all night and stay up waiting for the announcement. If it happens, it'll be the greatest call I ever made. And it will tell me that we are on the path to maybe restoring manufacturing and giving our kids a future. If you haven't heard my thesis by now, it's everywhere. You can go back and listen to it. I'm the only one stupid enough to say it, but I believe it. And if it happens, we'll know. And I said, but if it does, I said 50-50. And if it doesn't happen, I don't think it's end of story, but it would be amazing if he just got up there and said, we're going to audit Fort Knox and maybe even tie something to a 50-year treasury in honoring of the 250th anniversary. Something that's simple would, I think, change the entire narrative for the rest of the year for you and I, what we would talk about. But she said, what do you think the odds are? I said 50-50. And I hate doing that. And that's 10 weeks out, 3 weeks.
Pull back for a moment. What Andy just laid out reframes the whole picture. China imported more silver in Q1 than at any point in their history. COMEX deliveries running hot. Retail still dead asleep. Then the kicker, Paul Winfrey, the economist who literally wrote the Project 2025 chapter on gold-backed treasuries, was just appointed advisor to the next Fed chair. Judy Shelton confirmed Trump told her directly he plans to issue them. Andy's putting 50-50 odds on a July 4th announcement. Stack that against Kevin's $5,500 gold call and the shorts flushed setup from earlier, and you can feel where this is going. The last few minutes are the payoff. The short squeeze setup nobody's pricing in, and the price targets these guys won't say out loud unless the camera's rolling.
So let's say that is the case, and let's say that Trump does make the announcement. Does that lead you to believe that there will be a quote unquote revaluation of metal?
See, that's why I don't think you need to revalue, and that's why Bessent came out and said we're not going to revalue it. If you use Tether, who their CEO is Bo Hines now on USA Tether, who is Trump's cryptos are, wink, wink, nod, nod, you guys are going to buy gold. Well, who's been buying all the gold? Oh, that's right, it's Tether. They bought more gold since the last 2 years than anyone but Poland. Well, you guys buy the gold with the interest you can't transfer out of the Clarity Act. You're going to push the dollar down so we can pay off our debt easier and sell manufacturing to the world. You're going to push gold higher, which devalues the dollar, but then also would allow the convertibility on the treasury that you sell. By the time it gets out there 20, 30, 40, 50 years, the price of gold is way higher. And that's why Van Eck funds came out and said, if the dollar lost reserve status, gold could go to 139,000. That was the number they came up with. That's not me, that's Van Eck. So you sell a $20 million bond due in 20 years. Right now it's 4,500 ounces. At $139,000, it's 120 or 30 ounces. A whole lot easier. Not only could you have zero upfront borrowing costs when you sell those bonds to rebuild manufacturing, but the constant appreciation of gold, where it's from the synthetic demand for U.S. treasuries, but organically putting it into gold instead of the Fed doing it. By the way, as Tether does this and other institutions, maybe JP Morgan would do it, Wells Fargo, they'll all issue stable coins.
They'll all jump on board.
It allows the government to accumulate gold by proxy. So it's not in everyone's face. The U.S. government's not doing it, but they buy it quietly from Tether, from JP.
Yep.
And so they build their gold stack. The price of gold goes to the moon. The dollar falls, which enables us to pay off our debt, sell manufacturing, reshore manufacturing. And when we have to make good on those bonds in 20, 30, 50 years, it's a fraction of the amount of gold we would otherwise have to give up today. To me, it's elegant. It works. And I told her, yeah, 50-50, I think it happens.